If cash flow doesn't fall, I still have these assets. However,
Mm-hmm.
here's
Mm-hmm.
you can't access your assets. What do you have?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Not necessarily might understand 100% the challenge of how you build a tech company, exactly like you said, like with the hammer and the chisel.
Yeah.
and,
Yeah.
and it might not happen. Not in 2 years, not in five
Sure.
years, it might not happen, especially in tech.
I-
Yeah, we only
I've had
hear.
I've had several companies that have just been really cool projects. Some of them still might be online.
Me
If I
too,
remember.
everyone.
Yeah.
Yeah.
And so, to your question on going from entrepreneur to investor. So
Hmm.
it's like you said, the purpose of your show, which why it's so important for me to be here to share this with people because it will truly transform like who, the person I used to be that I've now grown. So first is healthy, right? Healthy, whether you have completely all your bills paid for and you can live your ideal life every single moment of every day, right? Or you're not where you want to be and you're looking to grow, right? You need to be healthy. So ultimately, what that means is, with the nutrition, with fitness, with just meditation mindset sort of piece, right? It requires focus. And that's ultimately what is required to get to your first million, right? It's focus. You do one thing very well. Correct. So you need to focus the same things with health, right? So focus like going to or getting some sort of like exercise. I even at some points in my life have just been, I'm going to go outside when I first wake up for 30 minutes, right? That's my exercise. Exercise doesn't need to be difficult or hard or
Hmm.
challenging, but our body naturally needs, right? So we need to do it, right? So as part of becoming that investor and the idea of like, I can live my ideal life at any moment of the day, you're still going to want to and need to be healthy. So whatever kind of habits you have now in terms of again eating, sleeping, all these things about yourself, now's the time to do it because it is the true unlock piece for where things are. I know too many, people in a lot of ways, this is my brand, the investor's guide to joy. Instead of just getting to that millionaire mountain, right? Let's instead pursue the path of joy. And I've seen how I've
Hmm.
pursued the path of joy. I got, 24% of a company that someone essentially gave to me because they were just like, hey, I want to see you succeed. You're really
Wow.
great. Let's go do this, right? That's very different than working really hard, right? And so my point is just there's all these, again, relationship capital sort of pieces. Like I'm focused on joy. I'm living my best life regardless of the income. And by doing that, I believe we will ultimately create more income, not just for ourselves, but others, right? And so that really goes into wealth, right? So as we are going from entrepreneur to investor, the two things I will share that will save so many people so much headache, so much money. You can send me some of your money for how much I saved you. But say that two things happen. One is that we oftentimes don't realize the nature of the consequences. So, for example, if I'm building a tech company and then I also start buying all this real estate, imagine I'm on a call with an investor and I get, constant calls from, a tenant or something, and they're throwing me off in terms of like this call, right? My point is that we don't want to be so split in terms of our time, and we want to understand how some of these investments impact us, right? Maybe we have a property manager that kind of offsets some of our time. So we still get some of the income, we get the depreciation, we have the investment, but ultimately my day does not look like, craziness, right? So
Yeah.
we need to kind of recognize like what we're sort of investing in. And then the other thing is going to be how we're investing in it and the details of it. So what I mean is this. Again, this is why I created Octane because I've seen this happen too many times. You meet someone at like a real estate meetup, right? They raise funds for multifamily or office or some sort of investment, right? You may not have a financial advisor, or maybe you do, but they don't have background in real estate. So you're left to your own devices, right?
Hmm.
They're saying, oh, hey, let me put 50,000 or $100,000 into this deal. Well, you possibly shouldn't, maybe because you didn't third party underwrite it, potentially because they haven't done several deals and they're just a nice, good person. I do a lot of deals with nice, great people, but I also don't do deals with nice, great people. And guess what? They're still nice, great people, right? Because it has to be about the deal. It has to be
Absolutely.
about person themselves and their character as well as their competency. But my point is to say, like, we oftentimes don't have that experience again of that like family office type, like, hey, this is a good investment or not sort of piece. And what happens is that as an investor, we want to get to like that level of sustainable kind of freedom, if you will. And it's like, oh my gosh, this is going to pay me 1.5 multiple and have a 8% pref in terms of cash flow. I have to do this deal. Well, do you? My point is that we might be forcing things and not realizing it for a number of different reasons. But ultimately, imagine if you didn't get that $100,000 back or that 1.5 multiple, and you spent 3 years, accumulating that $100,000. The deal went south. You maybe even had to put more money in as a capital call. That's not good, right? And certainly no one wants that. But my point is that as we go from entrepreneur to investor, we need to have the right people around us. We know as entrepreneurs that we delegate and elevate, right? But for some reason, when we become investors, we're like, no, I got this. I totally understand everything. And it's like, so you have a background in private equity, investment banking, analysis, and like what?
Risk,
Yeah,
risk.
oh my God, rent, taxes, like all these kind of things, right? And so you need this group of people to really help you do that transition. Again, I've talked about, if I had a dollar for every time I said octane on this call, I'd have at least five. But my point is just like that's why like it's so important for me to have people have that like business-minded growth piece around them as the entrepreneur, as well as those financial sort of like aspects because otherwise you're going to do opportunities that aren't the best for you, or you're going to maybe put too much into that. I also know entrepreneurs, myself included, that I've been in situations where like I don't have cash, like I cannot pay rent next month. And so those aspects are absolutely imperative. So it's important to have financial guidance as we're being investors, just like we have business guidance. So if you don't have a business coach or an accountability sort of piece or some sort of board of advisor or a C-suite or something within your business, that's also an opportunity for you to grow and try and be, right? Because again, who has done it before, who can help me, who can do it for me, things like that, right? That's the same exact darn thing with being an investor, but oftentimes I felt and have experienced that like we may not have the $5 million liquid, right, to work with a wealth manager. And so we're like, oh, well, then like I just need to make this money myself and then I'll go talk to the wealth manager. Well, again, why I created Octane. So we want to make sure we always have kind of these advisors and feedback loops and things like that. One for business, and this is a key thing that I've not done that well over my career, is to have, again, those advisors and people there to coach us and train us and help us, right, with the business. And like I said, also with the investments. So that way we can make that transition if we want to be, full-time investor. And then I also know investors who are then, investing back into companies. But again, we have to have some of those basic blocks. Otherwise, we're just, rolling dice, really, and hoping for the best. And it sometimes
Rolling
works,
dice,
right?
exactly like you described. Yeah. And then, Paul, there is other way that we can structure to be entrepreneur. The other day, a tech company was asking me to help them out, and when I'm talking to them, they say, well, you see, they start with the product, and they have good corporate job. They were doing the business on the side, so they all have good salaries. So that
Yeah,
they're all putting money and money and money and money, and say, guys, how much you put into the thing? It's over $200,000. I'm like, what? And now they they don't have resources to bring the product to become market fit, and then they
sure.
put all the money in the product.
Mhm.
You need resources for that. What do you thought that you're gonna create the product, and because you thought that this product is gonna change the world, people will come and buy it out of the sky. So
Sure.
the what we're talking for is another way that we can make the life easy for the entrepreneur to diversify and have sources of cash flow that number one, it will give you the income, steady income for you to invest in marketing, for you to invest in product development, and you can the risk if you don't have all your eggs in one basket. You have some of them money in
For
property,
sure.
some of them money in a lending vehicle. I don't
Yeah, it's
know,
working for you, like you said. Yeah.
exactly, and give you cash flow. I know other vehicles. I know that some stocks pay dividends and
Mhm.
can give you money monthly. You know, I'm a big fan, Paul. I have to tell you about cash flow because my first business it was exactly renting the rooms. So
Yeah.
I was very young like you and getting a lot of money monthly.
Yeah. Yeah. I mean, that's one thing I've seen, that oftentimes we want to go for the, equity play, right? Instead of necessarily the cash flow. And so, for example, debt funds, right? Investing in those, right? Or, kind of doing private money lending, like you're mentioning, total asterisks. Like if you are lending, money to other people, like have advisors, have like the legal stuff. Don't just like give money to people. Cause I also know of people who've just been like, oh yeah, I'm going to get,
You need
6%
to know what you're doing. You need to know what
$50,000.
you're
And
doing,
then
otherwise you can lose all your money.
exactly. So the other thing that I found to be like the best, and part of the reason why I started raising for it, is with oil and gas syndications, right? So if you're a W-2 employee or even a business owner who has high taxable income, right? You're then going to pay a lot in taxes. By investing in oil and gas, you're going to get up to 100% of the amount that you invest in depreciated. And in terms of a cash flow, right? You are also getting typically 15 to 35% annualized returns. Okay.
Wow.
Completely passive. It's also, diversified, right? Because it's not real estate. It is different. Now, I'm really big in terms of educating on this, right? Because if you're coming from real estate, you're like 15 to 35%, and that's normal. Yes. However, there's basically 5 different types of oil and gas investments. We won't go through them here. If people, really want to know, on my website, there's an investment tab that says oil and gas, and I have an ebook that breaks down everything in terms of the different types, the risk, right, for them, how it works with taxes, things like that. I've had several real estate guys sell some of their portfolio to put into oil and gas just to have cash flow. And one of them even became a life coach, right? Because he just needed the cash flow to then go do what he, loved to do. But he also needed to offset the capital gains and all this sort of stuff. So meaning to say that, like, absolutely cash is king, no matter in what currency or state or market or economic condition. And so you want to be able to have, again, those type of things like the oil and gas, like the debt fund. And yes, real estate, if you kind of own and operate it, right? Just like you said with rent by room or maybe a long-term rental. But regardless of what cash flow you have, the one thing that's also snagged me, we'll say, and so we also want to make sure from a diversification and from a just risk pool sort of piece, to say that if we're getting $2,000 a month for this stuff, we don't only live on the $2,000 a month. Because imagine if 1 month you get that $2,000. Well, guess what? You have $0. Okay? We want to make sure that we have reserves, right? And yeah, we have this cash flow, but we want to create this kind of flow of money, ultimately, where we have our, reserves, and then we have our cash flow, but some of that cash flow is, kind of being saved or stored away, or maybe, ideally it's most of the cash flow, right? Ideally, you still keep that job or have that business or things like that, where it's still, pumping dollars. And then you're not living off the cash flow, but you're using that cash flow to reinvest. I was able to do that with real estate, with short-term rentals, and they also
and they all giving you cash flow.
Yeah, they're all giving me cash flow. Yeah, so 2 of them are short-term rentals. They're all in Texas. 2 of them are short-term rentals. One of them is a long-term rental, rent by room, right? I lived in that for 3-ish years. But it's to say that with that cash flow, I've been able to use that to offset income and have the cash flow, offset income in the sense of taxes, right? There's special short-term rental kind of depreciation and tax rules that you can do. You can also do cost segregation studies, which depreciate the property values accelerated to, again, offset taxes. But meaning to say, like, I was able to multiply my net worth by 7 times in the span of that 18 months because I was investing properties in this right way, right? Which ultimately, as a tech business, fundraising, helping people, entrepreneur, right? I then had this, backbone to say, hey, if cash flow doesn't fall, I still have these assets. However, here's you can't access your assets. What do you have?
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.